loud. Okay. Hello, good evening. Okay, we have one other person coming. Okay, so we have 10 people. Good evening, everyone. Thanks for joining us. My name is David Hitt. I'm a realtor with Keller Williams here in Los Angeles. I've been living and working in real estate for 23 years. I have my broker's license, and my business partner, Ronald, is on here with us too, Ronald Shore, and he's been in the business 14 years. So today, there's been a lot of new developments out there and a lot of uncertainty. And so we wanted to have this webinar to kind of hopefully get some industry experts together to, you know, kind of comment on their part of the market, to kind of give us some more guidance and kind of a stance on where everything stands right now with regard to real estate and financing, and if you're a property owner and so forth. So what we're going to cover today, there are going to be 4 things. The first are the factors that affect local real estate. The second will be the opportunities. And then the third thing, how to determine the right timing. And the fourth item is selling and buying a home safely today. So let's go first to talk about supply. Here is LA County year over year. I'm sorry, this is the demand. Here we go. LA County year over year with listing inventory. 2020 is the blue line here. So we're just, you know, we're in April right now. So we're just over 8,000 listings. As opposed to last year, 2019, we were up here well over 12,000. So there's a significant gap here with regard to inventory. Let's go to demand. Now, if you guys have any questions, you can post them in the chat box, and we'll get to them towards the end if you don't mind, since we're getting a late start here. I do apologize. Okay, so we talked about supply. Now we're going to look at demand. Again, so these are the pendings for 2020. It's the blue line here. So in April of this month, we're at almost 3,500 pendings. Last year, the orange line, which is 2019, we're down significantly from over 5,000 last year to 3,500 this year. Okay, now let's look at affordability. Here's the affordability. Now, the low interest rates and the environment with the low rates certainly boosts affordability. So today, here we're at about 3.25%. Is that correct, Randy? Today's conventional?
Right.
Okay.
Yep.
So a $500,000 house would be a payment of $2,176, $750, $3,264, and for $1 million, it's going to be $4,352 a month. Now, last year, the rate was higher at 4.4%, and payments were higher. Same with 2016 and then 2007. So the rates right now are the lowest, and it boosts affordability better. Best time to buy than in the past, the recent past. So let's go to unemployment. Right now in California in February, the unemployment figure was down to 3.9% in California. Now, we know that rate is higher, a lot higher, since COVID-19 came in. So that's the most recent statistic we have on the graph to present to you today. There's the graph. Okay, now let's look at what this does to the market. So this is the expected days on market for properties. 2020 is the blue line. So right now it's between, this is overall LA County, between 60 to 80. So we're about 70, 73, 74 days on market. And that makes us right in here on a slight seller's market at the moment. That's the market that we're in today. Last year, 2019, we're about this time of year, we were about the same, a little more days on market this year than last year. Okay, so now let's look at what are the opportunities ahead for us. Okay, first thing is buying up properties. Finding deals, opportunity, number two is buying an investment property, non-owner occupied, and maybe renting it out Airbnb. Let's talk about now, when is the right time? So the right timing questions are, the first is, how stable is my job? Have you been laid off? Is there any anticipation on your company making any major layoffs in the near future? What's the likelihood of that? The second thing is, how stable are my reserves? Do I have, 6 months or more of reserves put in the bank for a rainy day? The third thing is, could I afford this if A, I lost my job, or B, I had no rental income for 3 to 6 months? So those are really three important things to consider, the right timing. Now, the fourth thing, how comfortable am I with this monthly payment? You should ask yourself. And then the fifth thing is, how motivated am I to move? And ultimately, what will it do for me? So those are all great questions when considering to make a purchase, whether it's a owner-occupied or an investment. Okay, so let's talk now about selling and buying a home safely in the COVID market today. If you're a seller today, what the things that we are now doing to acclimate to the present climate is, before people come to see your properties, we're making sure that we're pre-qualifying every buyer, making sure that they're pre-approved, even better yet, they're fully underwritten, they have proof of funds showing that they have the money in the bank before we even make the appointment to show them the house. The next thing is, we're going to make sure that they've seen the 3D tour also. Have they been pre-approved? We already said that. Are they contingent? Do they have to sell a home in order to buy? And the next thing is, have they been in contact with anyone who's ill? The last thing, only primary buyers can view the property, no children, unfortunately, just for safety reasons. The next thing is social distancing standards. We want our buyers to make sure that they wear gloves and a mask. We provide those items to the property if they don't have them with them. We tell them, please do not touch anything. And there's only one person in the home allowed at a time. for safety reasons. Again, you know, our first priority is always the health and safety of our clients and our colleagues. Now, if you're a buyer in today's market, looking at properties, you're going to be looking at a lot of Zoom tours of homes or virtual tours or FaceTime, you know, video tours before you go out and look with your realtor. We also ask our buyers today to, because of the new circumstances, to go around and drive around in the neighborhood of the properties that they've seen online that they like, to make sure that they like the neighborhood and, you know, the location. Then have they seen the virtual tour? And then we narrow it down to their top picks after they've done those two things. And the same rules apply for the listing side. Virtual inspection and summary. So what we'll also ask our sellers to do in this time is do a pre-sale, pre-market home inspection, so that we can also provide that to any buyers that are interested in the property as well. And now when you go under contract, the lenders are, it depends on the lender and depends on the appraiser. But some appraisers, some banks are only doing drive-by appraisals right now. There are some appraisers. Randy, our appraiser on the new one is going to go out, right? The new purchase.
Fannie Mae, Freddie Mac came out and said they were going to try to start doing more drive-bys, but that's not happened. So yes, today
okay, so
appraisals, unfortunately.
Okay, so the new one's going to go out and see the okay.
Yes, sir.
So it just depends on the bank, and it depends on the appraisal maintenance company. Now, the same rules apply to them as going to the property. We ensure that they do the social distancing, one person in the house at a time. If they don't have gloves and a mask, we will provide those things to them. Please don't touch anything. We'll have all the lights on and all the blinds open and all the closet doors open, and so they don't have to touch anything.
And the appraisers will generally, David, the appraisers will generally give anybody that's there, homeowners or otherwise, the opportunity to say, I want to be in the house or I don't want to be in the house. So there's some discretion there to try to maintain our social distancing right now.
Okay, well, again, our first priority and concern is the health and safety of our clients and our colleagues.
Right.
All right, so then let's, after the appraisal, and we've done our inspections, we're going to do a virtual walkthrough. And if we prefer that they do a virtual walkthrough. Again, one person in the house at a time, the same social distancing cautions. They have put out, the California Association of Realtors, some COVID-19 forms. One of them is a waiver. They go into a property, anybody that goes into the property, whether it's the buyer, the home inspector, the appraiser, they have to sign this form waiving that they're aware that, you know, we're under virus control right now. And if they enter the home, they're doing so at their own risk, and they're suggested to take the recommended social precautions and gloves and masks. Now, there's another form that when you go under contract that is a COVID form advisory that has to do with if for some reason the buyer cannot perform the contract due to some reason of COVID-19, meaning if they lost their job or, you know, they lost their place to live or whatever, there's a provision in there for that. Okay, we want to let Wayne Marshall in, the attorney. Okay, the next paragraph talks about if for some reason they need more time due to COVID-19, the lender, the buyer, that they can have an automatic extension of, I think it's the blanket time is 30 days but you can change that in the form, make it whatever time frame that you want. Okay, so those are pretty much what's going on in the real estate market right now. Let's have, we have a local attorney who is familiar with the law with reference to the current pandemic, and he is going to share with us now. Wayne, are you there with us? Let's see here.
Hello, hello.
Wayne?
Yes.
Wayne? Hi.
Can you hear me?
Yeah. Let
Can
me,
you see me?
figure.
No.
Not yet. Hold on one second.
Sure thing.
Let me. Okay, here we go. Let me get this off of my share screen. Okay. Pause share. Okay. Are you there with us?
Yes, I am.
Wayne?
Yes.
Okay, so go ahead. You have the floor till 7:15.
Can you see me?
Let's see. Randy, can you see Wayne?
No, I can't see him.
I can't either.
I can't either.
I believe he's
Okay,
iPhone
1
7.
minute.
Oh, there's Wayne Marshall. Wayne, maybe turn the video on.
Me?
Yeah, you're.
Yeah,
Yeah.
I see his name, but I don't see him.
right.
And hey,
How do I do
I
that?
just want to say real quick, David, Randy, you guys are awesome. Thank you for doing this.
Oh, sure.
There we go. All right.
Yeah. Hi, Wayne.
Good evening,
Hi, Wayne.
everybody. Nice
There
to
you
meet
are.
you. Let
Wayne.
me tell you, start by telling you a little bit about myself. I'm an attorney in Encino. I've been in practice for 42 years. We've handled almost exclusively real estate and business, litigation and trial work the entire time. We're a small office, 2 attorneys. I am outside legal counsel throughout Southern California to Coldwell Banker and have been so for almost 20 years. We handle a wide array of legal matters for the company, but it's primarily in the litigation area. Most of what we get involved in is residential sales litigation, usually involving non-disclosure. We also handle periodically for Coldwell Banker and other brokerages commercial litigation in the area of not only sales, but leasing as well. And with that, let me tell you what I was asked to do here. I'm going to be speaking concerning the legal effect of the COVID-19 pandemic on the rights and remedies of landlords and tenants under leases and rental agreements. What I will be discussing concerns not only residential, but commercial leases and rental agreements, as the governor has included commercial rental arrangements as well under the purview of the recently enacted emergency legislation. This legislation does not differentiate in any way between residential and commercial. They're treated the same way. I will also briefly speak about the rights and remedies of purchasers and sellers under the residential and commercial sale agreements. I saw something up on the screen. David, did you distribute that email I had sent you?
I haven't yet. I'm going to do it right now. My apologies.
All right. I'll get to that later toward the latter part of my presentation.
Okay.
Okay. Now, just a moment. Let's start by discussing rights and remedies of landlords and tenants during the pandemic. There are a number of orders and rules that have been passed recently by the governor, the Chief Justice of the California State Supreme Court, and the presiding judges of the various county courts in the state of California. They are, relatively speaking, consistent with what they're ordering. And I want you to understand that we're dealing with a real mess here. It's such a mess that the powers that be decided that the best thing to do for the time being is put a freeze on the court system. That freeze will go on through roughly mid-May, and the courts will not even be open for general business until, at the very earliest, June 22nd. And that June 22nd reopening date is based on a number of assumptions. And I think we all understand what those assumptions are. The chief assumption being that it will be okay for us to get near each other, maybe, in close quarters. Frankly, based on everything that I read and have heard on the news, I'm not convinced that we will be reopening the court system on June 22nd. I think it's going to be more likely sometime in July or August. If you think about it, and this doesn't necessarily concern you, unless of course you've been called out with a jury summons to serve on a jury, we can't have jury trials. Why? Because the courtrooms are not set up for jurors to be sitting 6 feet apart. It's a real mess. And that alone interrelates into the issue of evictions. Why? In the last several years, attorneys who handle the defense side of eviction cases came up with an idea. The idea they came up with was, well, let's stall it out. Let's stall it out as long as we can. And the best way to do that is to ask for a jury trial whenever an eviction action's filed. So they now routinely ask for jury trials in these cases. What does that mean as a practical matter? In a normal environment, if we were not dealing with this pandemic, that alone could easily stall out getting a trial date on an eviction for as much as a month, maybe even longer, because there are only so many courtrooms available to try the cases. So we're dealing with that problem. Oh, okay. I'm reading from a bunch of notes I put together at the last minute here for you. I'm going to share with you what I think are the salient things to know. Here's a good question I've had people calling and asking. Are only the renters of apartment dwellers, are those the only people who are within purview of this order? Oh, no. It includes anybody who rents an apartment, a condominium, a single family dwelling. You have to keep that in mind. It's across the board. It also affects the rights and remedies, as I stated earlier, of commercial tenants and landlords as well. It even includes duplexes in addition. I'm going to read for you from an order that was signed by Governor Newsom on March 27th. And what it says, I'm going to read it somewhat in reverse, that while this order is in effect, no one can be evicted from a residence or dwelling unit for non-payment of rent who satisfies one of the following requirements. Prior to the date of the order, the tenant paid rent due to the landlord pursuant to an agreement. And then, plus, the tenant notifies the landlord in writing before the rent is due or within a reasonable period of time afterward, not to exceed 7 days, that the tenant needs to delay all or some payment of rent because of an inability to pay the full amount due to reasons related to COVID-19, including but not limited to the following. 1, the tenant was unavailable to work because the tenant was sick with a suspected or confirmed case of COVID-19, or caring for a household or family member who was sick with a suspected or confirmed case of COVID-19. Or the tenant experienced a layoff, loss of hours, or other income reduction resulting from COVID-19, the state of emergency, or related government response. Or 3, the tenant needed to miss work to care for a child whose school was closed in response to COVID-19. As you can see, it gives the tenant a wide range of excuses not to pay rent. And what that ultimately means is that during the period of the emergency order, no tenant can be evicted, whether from a commercial or a residential unit. And at the end of the period, when the order is up, no one can be evicted for at least another 90 days thereafter. So theoretically, if we're talking about, let's say the order's up, right now it's supposed to be up around mid-May. It's never going to happen. It's probably not going to happen until somewhere between mid-June and mid-July at the earliest. For 90 days thereafter, no one can be evicted, if you can believe that. This is going to have a big effect on your ability to handle residential sales, leases, commercial sales and leases. It's a major impediment. I'm looking at an order that was issued, let's see here. That's right, from April 7th through May 12th, the courts are closed. Then the court can set unlawful detainer, those are eviction trials, but no less than 90 days thereafter. That's what I was talking about. There's a list of maybe 30 different types of matters which the court can entertain during this period, not one of which includes evictions. And according to the court's order, this is Superior Court of Los Angeles County, all other matters that would include evictions will be continued by the court. The parties will receive further notice. It doesn't say when the notice is going to be given. I guess what I'm saying is you're looking at well into late in the year before people will be able to be evicted.
Wow.
So it's pretty serious. And if you can imagine what it's done with my business, we're in court all the time. We don't have court. They are not doing any pre-trial law in motion, certainly not trials. Everything's being put off for indeterminate periods of time. I'm starting to get notices from various courtrooms here in the county advising us that our matter's been continued for, 2-3 months, but subject to the court continuing yet again for another indeterminate period of time. So it's pretty amazing what's going on. I will tell you, I'm also a professional mediator and an arbitrator. I sit as a judge in arbitration matters. And we're not doing any arbitrations right now. There may be unusual situations where an arbitration may be handled by Zoom or WebEx or another service, but not likely. We are handling settlement conferences known as mediations. Routinely, we're doing those by these various internet services. I'm going to give you a website, a web address that I'd like you to take a look at. This is for the Apartment Association of Greater Los Angeles. And the website, if you want to write it down, and I recommend highly that each of you do, is aagla.org. aagla.org. If you hit it, as soon as the page comes up, you will see, I think in big, in blue boxes, there are 2 articles that will answer so many questions that you will have. One is called Temporary Eviction Moratorium Summary. It gives you a really good brief summary. You can read it in 5 minutes or less, county by county, because while the governor has issued orders, it's up to each county how they want to modify those orders or follow them. So each county is a little bit different. Orange County is a little different from Los Angeles. So if you're selling or leasing a property in an adjoining county or outside of LA, you have to check with the other city or county to make sure they don't have their own special rules. Very, very important. You will also find on the aagla.org, the Apartment Association of Greater Los Angeles website, on the start page, another section, FAQ, frequently asked questions regarding rights and remedies during the pandemic. It really pretty much summarizes just about every question that you could possibly have, so that we don't need to take up much time this evening concerning that.
Wayne, I did send out your handout just now.
Oh, you did? Okay,
Yes.
good. Very good. Thank you, David. Now, last but not least, I just sent you a treatise material from Lexology. It's a legal service that provides treatise materials concerning various areas of the law. I think if you read it, you don't need to, is anybody here I'm speaking with an attorney trained as a lawyer? No. Okay.
No.
You don't need to be a lawyer to be able to understand this. And I'm going to recommend that you take a look at it because it's very, very interesting reading. I'm now turning to the area of commercial and residential sales agreements. The CAR form purchase agreements do not have, to my knowledge, force majeure provisions. Those are provisions and contracts that provide that in most unusual circumstances, including acts of God, that it provides a bailout, a remedy for a buyer or a seller wanting to get out of an agreement that they've entered into based on the emergence of one or more events occurring. It's usually referred to generically as an act of God. And if you take a look at your agreements, you'll see that those just aren't in there. Do you need a force majeure provision in a contract in order to void it? Not necessarily, not necessarily. And if you read this article, you will see that there are various ways to attack an agreement to get out of it. One, first and foremost, we have the MAE, or Material Adverse Event provision. That's an event which occurs that was material to the performance by one or both parties. Is often used in an effort to avoid enforcement of a contract. You might want to read that. It goes into, on page 4 of the handout, it discusses force majeure provisions. But if you go beyond that, even beyond that, we have in the law what we refer to as common law provisions, which may be asserted to avoid enforcement of a contract when you don't have a material adverse event, or you don't have a force majeure provision. These are common defenses: impracticability, that it's not practical to execute the contract. Or another one is known as frustration of purpose, that this outside event frustrated the purpose and intent for which one side entered into the contract. There's another defense. It's the defense of prevention. In this case, it would be a prevention by a government regulation, such as what's been promulgated by the state, the county, and the Supreme Court here in California. I recommend that you take a look at those defenses too, just to understand that even if you don't have an express provision that provides a party to a contract with a bailout provision, there are still ways to get out of it. Not to tell you that they're foolproof, they're not, and they're much more difficult than would be if you had a bailout provision in writing in the contract. I'm happy to take questions now, or you can feel free to contact me at my offices. I'm working remotely most days from my home. I also occasionally go into the office. If anybody would like to ask questions now, please go right ahead.
There's one person that mentioned, I'm not sure if you're the right person to ask, but I will pose it anyway. Michelle asks, what about foreclosures and ability to pay your mortgage? Are banks giving people room here? Or would that be more of a lender question?
I think that would be more of a lender question, and I believe that you have,
okay.
Is it Randy?
Yeah.
Yeah.
Okay.
Okay.
So we'll deal with that one. Anybody, and I put your website, waynesmarshall.com, in the chat box, along with the PDF of the document that you wanted distributed.
Great.
So I thank you for that tonight. I appreciate it. And that was helpful. And I will be in touch, Wayne, with you mañana.
I have a question, if you don't mind.
Please.
Oh, sure.
Okay. So I own property here in LA and as well as Texas. I don't know if you're familiar with Texas law at all, but
No, I'm not.
okay. So as far as the property out here, thankfully they paid this month, but you know, as this progresses, you know, I understand that that, you know, people are, it's a hard time. I too am no longer working. I work for a law firm. I know I'm no longer there because we don't have any work. Everything's paused.
What type of work does your firm do?
Personal injury.
That's what I figured, yeah.
How did you figure that?
Well, because I sublet space to young attorneys in my office who do expressly personal injury work, and they're very quiet right now. They're not able to do much work with the insurance carriers, and they spend most of their time dealing with them. And
Yes.
seems like things are pretty much abated in that industry. And with the work that I do, I've been in practice, for over 40 years. I have so much stuff that's coming in and ongoing that I have not yet felt the effects of this. I can do as much work as I can place phone calls, talk to clients, talk to parties, and crank the work out. It's just, I can work 10 hours.
Okay.
Right now, I'm just very, very busy, but unlike other areas, let's say, of the law. You had a question regarding your California property?
I just wanted to clarify. You said that, I want to know if I understood you right. You said that that if the tenants are unable to pay due to this pandemic, that they need to provide within 7 days a written notice of that.
By April 8 or May, by say April 8 or May 8, assuming arguendo, the rent's due on the 1st of the month.
They are, yes.
Yeah.
Okay. And then if they can't pay, do I request that they pay as much as they can, or how do I work with them?
I would do my best, if it were me, I would do my best to work with them as best you can.
And that's
Okay.
the general consensus out there is landlord tenant needs to try to work together to come up
Right.
with a payment plan, because there are provisions put out there that allows them to put off and not allow you to foreclose on them or to evict them. So the rumor or the word out on the street is landlord tenant should try to have a working relationship and come up with a game.
I'll tell you something, we're in unknown territory right now. And I will tell you that if I was representing a landlord who didn't care about the tenants, didn't give any breaks whatsoever, no consideration to the fact of what's going on, and immediately after the 90-day freeze was lifted, they proceeded to trial, and we got to trial with a judge. Do you think for 1 minute the judge would take well to the landlord's position? I don't think so. And you don't want to take that, you really don't want to take that chance. You're best off trying to be as accommodating as you can possibly be. And if it turns out that you have to pursue eviction, at least you'll have a paper trail that shows that you made every effort to be as reasonable as possible with your tenant. I will tell you that even if the tenant doesn't notify you within 7 days and give you the proof that's required by this emergency order, in all likelihood, when it gets to trial, the judge is going to ask the tenant, well, what's your proof? You didn't give it within the 7 days. What is your proof? And if they can come up with the proof at the time of trial why they were unable to meet their monthly rental obligation, I think the judges are going to overlook that 7-day rule and give it to them. That's just, that's the way it's going to work in most cases. So you can just, hope for the best, assume the worst, work as well as you can with your tenants, and be as reasonable as you possibly can, and paper trail. So if you have to prove it to a judge one day, you'll have the paperwork to prove that.
Is text messaging considered paper trail? Is that taken?
Text messaging is a paper trail. You can make enter into a contract by text. Text is great. Any written proof you have. The best proof would be emails, texts, rather than phone conversations. A reminder, if you don't already know, you cannot secretly record anybody, whether it's audio or videotape. You cannot do it without their prior knowledge and consent. So that
Is the name Adrene?
Audrey.
Audrey, it's nice to see you. I have the same concern you are, and I was just going to turn my light on because all of a sudden when the sun went down, I became ghost-like. Sorry. I had the same concern that you have. I have a small bungalow in the Hollywood Hills, and I pay a mortgage, and I don't have rent. What do I do?
What do you mean?
Right, I pay mortgage too.
You're living in
No, no.
renting out to someone.
I'm sorry. I pay mortgage and I don't receive rent. And so I'm a little bit stuck. Maybe I can do 1 or 2 months, but after that, it's going to be hard.
Randy?
Is there a tenant living in that house?
Yeah, it's 2 bungalows on 1 property.
Yes.
Yeah.
And they're
So-
unable to pay?
So Wayne knows the answer, and the answer out there is work with them. Because as Wayne knows, you're not getting to trial. You're not going to get to court till August at best.
No, not even then.
Right, exactly. So, you're in a bad place, we know, especially you have a mortgage to make and you're not getting the rent. But everything I'm seeing out there, the renters are going to lose eventually because when they go to buy something, this will show up. But if they can't make it because of the virus and they physically have no means to, the best thing they're saying out there is to try to work with them, try to figure it out. You then need to go to your lender. You need to try to do something with them. But at the end of the day, that's all we can do right now because you're not going to ever get to that place for 6 months before you can do anything. So
under the current construct, this emergency legislation, eventually, these tenants who don't pay are eventually going to have to pay.
Right.
Right now, I think it's a 12-month period.
Correct.
They'll have to pay it, and they can
Yes, sir.
spread it out evenly monthly.
Yep.
But there's been talk about extending that out beyond 12 months too. So everything is up in the air. But just because a tenant isn't paying, the tenant needs to understand that they're not going to get away without paying anything.
Right.
That eventually they're going to have to pay it, but it's been put on hold.
Right.
And what if what if you're paying the water for those units?
Yeah.
Cut it off.
I feel very pinched. I kind of empathize with my tenants, and then I own a small business and I had to shut down, and all of a sudden I have to pay a mortgage and I have to, it's really,
I understand.
yeah, it's very tough.
That's a very good point. Question you brought up. What about the utilities that I have to pay? Unfortunately, you're not in a great position. And if you cut off those utilities, you will be the biggest, baddest, worst landlord in the courthouse. And you will have the book thrown at you. So just grin and bear it for the time being, okay?
No, the intention's not to do that. I was just throwing that out there.
Sometimes landlords, you'd be surprised. Not in this environment, but in normal times, landlords will ask me, can I turn off the utilities I'm responsible for paying? And then I parcel it out. If it's a commercial property, sometimes they have one panel. So they bill out each of the tenants. And I always tell them, don't dare do that. Because if you do that, you're going to look so bad. You're going to get the book thrown at.
We're all thinking doomsday. This is going to be over. It's going to be over in 60 days.
It's not as bad. Right, but Randy, it's not as bad as it seems.
Exactly. Thank you.
Right.
So
we're all in this thing together. We're all going to get through it. It's just a weird time.
Right.
And my best advice is don't sit in the house 7 days a week, 24 hours a day. Get out and get some good exercise and clear your head once in a while, at least once a day. That's how I'm surviving.
Very well.
Perfect.
Okay, everybody, any other questions?
Well, that was leading into my question before, like, what if you can't pay your mortgage? How are the banks looking at this? Like, what happens if, I mean, if you don't have the money, you don't have the money.
I'll discuss that.
Yeah.
Okay, okay.
Okay,
And then I have
Anything
a
else?
question. I don't know who this relates to, but my question is, and I just forgot it.
COVID brain, that's COVID brain.
Oops.
Is it regarding the legal or
Oh, I remember.
mortgage?
I remember. I was just actually looking to buy before all this happened. So I was thanking the heavens that I didn't buy because I'm like, oh my God, not buy for myself, but you know, for rental purposes. So my question is, when do you think, I mean, obviously nobody can predict, but being in the field for as many years as you have all been, I have not. I'm just barely starting a couple of years under my belt. So when do you think would be the best and ideal time for somebody like myself who's just getting into the game of purchasing property and renting them out?
I think, Randy, you're muted. I think now is the time as far as interest rates are concerned. Randy, what is your opinion as far as the timing to buy investment property? I say now, I think, but
Now's the time to be buying every kind of property possible. We have a lack of inventory. We have competition down right now because of the virus, and it's only going to increase once it's over.
and some of the sellers we've seen remove their properties off the market until this passes also too. So that hurts our inventory also.
Right, but
Right
it's
now.
also the serious buyers are out there, the serious sellers are out there right now, right? So if you saw some reports, Barbara Corcoran from Shark Tank, other people, they're saying that the competition in the seller's market's only going to heat up once this is done, right? Says maybe now's the time with interest rates where they are, and they're not going anywhere, in my opinion, the rest of the year. Now's probably the time, if you're interested and you want to be, is to be out there and doing it.
And
Right,
what if you're not, okay, so interest rate wise, I get it, but what about as far as house pricing? Do you expect it to decrease as drastically as 08 or nearly, or
No,
what's
no.
So Fannie Mae came out with a statistic 2 days ago, David, that originally forecasted home sales to be increased over 2019. They're actually now saying because of this virus situation, we're looking at a 15% decrease in home sales over 2019. But they're looking at a slight increase in prices. What's that tell you? Supply and demand. Right, David?
Right. Yeah. So now it's if someone owned a property and let's say they lost their job or some financial hardship, there's going to be some people come forward and say, you know what, I can't hold on to this property, I got to sell it, or in some other sort of hardship, and finding things like that as a buyer as an investor, you know, as far as now being a good time to find those kind of opportunities, those are going to be coming around. So I hope that's helpful.
It was. Thank you.
Okay. Randy, do you want to, Wayne, thank you so much.
okay,
Thank you.
I
Wayne.
think we're going to let Randy take the floor,
very
and
good.
then Ed.
Okay, everybody, stay safe. Nice meeting you.
Thank you, Wayne.
Thank you, Wayne. I appreciate you.
Take
Bye.
care.
Have a good night.
Thanks, David.
Thank you.
Bye.
Thank you,
Take care.
sir.
Bye-bye. Okay.
Thank you. Thank you.
Hi, guys.
Okay, Randy. So
My name's
Randy, you've
Rand.
got the floor.
Thank you, David. I'm
Yep.
Randy Diprima. I work for a company called CSMC Mortgage. I used to own my own business, my own company. I retired after 31 years in the business. So I've seen everything there is to see in the lending world. from the 2008, 2010 implosion, and CFPB, Dodd-Frank. So you guys have all heard of these terms that has been created that has changed our world from those loans that we did a long time ago, where if you fogged the mirror, you got a loan, right? The 1 1/4 neg am type stuff. And we're back full circle. So history repeats itself in some respects.
So do you want me to ask you the questions, Randy, that I had, or did you have notes that you wanted to go through?
I would love you to ask me, David.
Okay. So what some of the people are wondering today about this and financing is how difficult is it with getting financing right now?
A lot more difficult than it was 60 days ago. So when I say that, guidelines are changing every day. Fannie Mae, Freddie Mac is not changing guidelines, but lenders are adding what's called overlays. So the lenders are nervous today. They don't want to make a loan to you today. You pick up the phone before you make your first payment and say, "Hi, I'd like a forbearance." That worries them because they have to make the payment. Then you got first payment default. So right now, for example, and it changes every day, hourly to hourly. Right now, Chase won't make you a loan unless you have a 700 FICO score and have at least 20% skin into the game, 80% loan to value. FHA, they used to do loans down to 580 credit score. Today, they're 680. There is a difference between conforming and high balance, if you're all familiar with that. So out there right now, conforming loan limits is 515,000 generally. High balance conforming depends on county. Ventura County 713, LA County 765.6. Above that's jumbo. Lenders today are afraid to make loans in the high balance arena because there's a high risk to them based upon forbearance. They are throwing in overlays that makes the borrower sign an affidavit that says, I'm gainfully employed, I've not been cut back, I have reserves. They make you prove 3 months reserves. So they're trying to prevent that forbearance and they're afraid. If you're self-employed, for example, and you don't have 12 months reserves, they're gonna cut your income back by 25%. If your income is derived, like both of yours are, from rental income, and you don't have 12 months reserves, they're gonna cut you back by 25%. Hard to qualify. So yeah, lending is tough today, but it will get better, and there are signs of that. So don't.
So the next question I have for here is the lending process, is it going to change because of COVID-19? Do you see that in your opinion?
Oh, it's already changed. Loans that take 30 days to do are taking 60 days to do. Every I, every T has been crossed. There are more disclosures, more affidavits, more everything out there because they're afraid to make that loan. They're afraid they can't sell it. They need to make sure. So yeah, it's changed quite a bit.
Now, have the rates been affected?
The rates have been affected. The lenders have upped the rates in the high balance area I talked about, the 515 to the high balance 713 and 765. The lenders don't want to take that risk. So what do? They up the interest rates. So there's no appetite for it. So yeah, that has.
Okay, and what about things like being affected, like notaries and signing of loan documents and closing time?
Closing times obviously have been increased a bit. Escrow officers and escrow companies are still considered essential. Notaries, depending on who wants to work, there are notaries still out there working. They're being protective. They're offering clients, you know, we don't have in our state a virtual notary, which some of the other states have adopted so far, but.
Which I heard they're working on.
Yeah, and so far the notaries are being okay. Closings have just been delayed a little bit because they need a last minute verification. So before they fund that loan, there has to be a phone call and HRs aren't working. How do you get that, right? So you have to have a verbal, that last minute. You have to have a last pay stub. So there's a lot of last minute things that are required before that lender's comfortable funding that loan. So that causes some of the delays, yes.
And then appraisals, can you comment on that one more time?
Sure. Appraisals aren't really being affected right now. Appraisers are working. They're still doing their job. They're still giving the client the opportunity to be in the home or not. So we're not seeing too much of delay in the appraisal arena. In refinance, go ahead.
Mm-hmm. No. I was just going to ask you, are you still doing purchases and refis?
Of course, absolutely. We're still closing purchases, and I think you and I have one going in 25 days. We'll probably close that a little sooner. Refinances used to take, 25, 30 days are now taking 45 to 60 days. So yes, business is still going on. And the problem is that people are working from home. Guidelines change every day, and lenders are afraid to make a loan that's not sellable. So that's a lot of your issues, right now. The other compounding issues to purchases right now and to businesses, a lot of the non-QMs, the bank statement loans, a lot of jumbo product has gone away. It's not out there right now. So the higher end stuff above 850,000, 900,000 is kind of sitting right now. Below that, still moving, still doing well. But I truly believe there'll be a great demand within the next 60 days for both purchases and refinances.
Now, Randy, what about forbearance? And can you talk a little bit about that? And if someone
Sure.
isn't able to make their mortgage payment right now, what should they do? What is your suggestion on those two situations?
So the CARES Act deals directly with federally chartered banks. So your FHA, VA, USDA, Fannie, Freddie. That came out and said, basically you can get a forbearance if you cannot make that payment for up to 180 days. 90 days, I don't know where people came up with that. After 180 days, you then can have another extension for 180 days. The problem with that is there's nothing out there and there's no definitive answer as to how do we repay that? Is it going to be put on the back end of the loan, those payments? Is it going to be amortized over the next 12 months? What is going to happen with that? And that has caused some confusion out there. We are advising clients not to take a forbearance for a lot of reasons. One, your credit report, even though it's not going to show a late payment, it's going to show a skipped payment. So if you have a skipped payment or payments put on the rears, that's considered a modification. Modification has been considered a foreclosure. Okay, that's a negative impact, big negative impact. So only unless you really, really, really need to, because you can't make that payment, should you exercise your forbearance right. If it is a non-federal or private bank, not all the non-QMs, they'll give you a 90-day forbearance, but then on the 91st day, they want that payment back. So you have to work out with the servicer, number one, are you federally chartered? Are you private? What are my options? And there's so much miscommunication out there and so much damage that can be done. Even the renters today, if the renters ask for that forbearance, the renters can't make their payment. What do you think the lenders are going to do? When they go to buy a property, they're going to do a verification of rent. And when they find that out, they're not going to make you that loan. So there's a long-term damage effect that is going to be created if people aren't able to make those payments. Back in the 2008-10, when people were all about those loan modifications, they had no idea that that would be a negative mark against them and considered a foreclosure. So a lot of misinformation out there, unfortunately.
Randy, thank you so much. That was a lot of information.
Yes.
That's very helpful. Do any of you have any other questions for Randy, the mortgage lender here, while he's on?
I do.
If you do,
Randy, sorry, Randy, my mortgage company is giving us the forbearance, and but then obviously putting the money right back in, applying it back into your payments. So your payments initially, your payments say are $1,000, then however many months you haven't paid, that gets added on to each month thereafter, and your $1,000 payment becomes a $1,200 1250, whatever. Do you think that that is something that I can apply and do with my tenants if they needed it?
Let's try to understand that question. What does that have to do with the tenants? I'm sorry.
Oh, so how the mortgage companies are taking this and
Yes, I hear what you're saying. Yeah, you can do the same thing with them. Sure. Absolutely.
Okay.
That's how I would try to work things out with them. But be mindful that your credit report is going to show those skip payments.
I'm not taking it.
Good.
At least
Good for
not
you.
yet. I'm hoping that it doesn't, really, fingers crossed, that it doesn't get there.
And that's what I would do. I would play it month to month. If I were a landlord, I would play it month to month like you're doing. And then when this is over, they're back to work after a couple months. Then I would come up with some payment plan where over the next 6 months, 12 months, whatever, we increased it by 300, 400, 500 so they get caught up. Absolutely is how I would try to play it out.
Okay, and what
That makes sense?
if the tenants, you know, what if the tenants say something like, I don't know, you have a deposit, why don't you use a deposit? You know,
That's
I mean,
not, well,
you can't.
again, that's up to you. So that's a good point. Can we apply that? But then you have no security, right? And they need to know that that's a security deposit. So it's all about negotiation. It's about your relationship with them. It's about how you feel that their business will come back, that they will be stand-up people, right? Because there's going to be some people out there, they're going to say, you know what? I can ride this out for 6, 12 months and not make a payment and oh, well, then I'll walk away, right? There'll be some of those people.
Yep.
Some of the people
I've
say
met
no.
them.
Me too.
Yeah, it's not always.
Right. Some people can't do it. So some people
Yeah.
are grateful for what you're going to offer them. So
Yeah.
that's case by case and your relationship with them, right?
Yeah. Okay.
I would say talk to your CPA or financial advisor, or if you have an attorney, you know, ask for that. But I think from what I'm, understanding from what all the webinars and the experts I'm talking to, use your instincts and see what you can work out with them, but don't. If I'm going to say this correctly, don't put yourself at risk to help them, I think is what the thought I'm getting at. So if at all possible.
Thank you.
Anybody else have
Well, I think to
questions for Randy?
that point, we don't have a choice. The city put us at risk, City of Los Angeles. And they've asked us to provide unsecured credit to unsecured creditors.
Yeah.
Right. You're
Yeah.
right.
Yeah.
Is
Right.
is the
But what's the
market,
alternative? Are you going to go rent it out to somebody right now? Maybe we evict them? What's the alternative, right?
I don't know. Does anybody know of any funding that the city is giving people who give unsecured credit to unsecured creditors?
I've not heard any. I don't know about you, David.
Uh,
Or the CARES Act.
I don't know. Ed Mofrad, our CPA, have you heard of anything like that?
Can you hear me?
Yes, sir.
Yeah.
Yeah.
No, I have not.
Okay. All right. Thank you. It's so nice of the city of LA to give me, you know, my money to give to people. But, you know, hey, I do it. We're all in the same storm, not in the same boat, but in the same storm.
Hey, you get a tax
Well,
deduction.
the good thing is that I look at it like, hey, at the end of the year, taxes, it's a write-off.
Yep.
I mean,
You got it.
there's that benefit. I mean, it's unfortunate, but there's that benefit. So it is what it is. I don't know.
All
I'm
right.
just trying to look at the bright side.
Good perspective. Thank you very much.
Welcome.
have you noticed that the line of credit market is drying up like the mortgage market?
Line of credits, equity lines, that type of thing?
Yes.
It's still out there. Obviously, there's more risk being in the second. So it's always, or lately, over the last several years, has been a tough situation. depending on loan to value, depending on the equity. But no, there are still several lenders out there doing that. Your credit unions are the best place to go, to be honest with you, if you have equity.
Okay.
And that's a great way to supplement the trying times is with an equity line, which are pretty cheap right now with where interest rates are right now. Good question.
Thank you.
David, we can't hear you. You're muted.
Hold on. Sorry about that. Thank you for that question. Anybody else have any other questions for our preferred mortgage lender, Randy Diprima? Before we go on to our CPA expert.
Thank you, Randy.
Thank you, Randy.
Thank you,
You're
Randy.
welcome. Thank you, guys.
Thank you, Randy.
Okay, you're on, Ed. Let me get the share screen up here
I
for
appreciate
a
that.
second. Sure, 1 second.
Sure. Hi, everybody. My name is Ed. As David said, David is a long-time partner, friend, collaborator. We've been doing one thing or other with each other since I don't even know how many years, for a long time.
It's over 10, almost
so,
10 years.
Yes. So when David asked me to join, of course, what am I going to say? I'm a CPA. As he said, the name of my firm that I started back in 1996 is Mofrad Financial Solutions. I started the firm right after I left the IRS. I used to be an IRS agent. I hated doing that. So I came here to Koreatown, LA, started the practice. That is right before the economic crisis, or this COVID crisis, was really, really booming. We had 6 employees and we were growing. We just moved to a brand new, beautiful office that everybody loves, everybody who dares to come to see it. Okay, to be honest with you, I wasn't planning on being on this call this late, or so I'm gonna really rush through my thing. There's a lot of material to cover. So I'm just gonna rush through it for the, this is my bio from just the bio that I gave to David. Next slide, today's discussion, thank you. Oh, by the way, before I start getting into this, the reason that I work with David is because we do a lot of real estate type tax and accounting work. Some mortgage lenders completely give us all their P&L and CPA letter clients because we have their templates, we know how to do it. And that's why our business in real estate is our predominant part of our business. We do everything real estate, taxes, P&Ls, again, CPA letters. So if I can help anybody with any of these, me or my staff, we have a great team, we'll be glad to. Today's discussion is going to be centered around these 5 really, the last one is an add-on, 6 topics, and the amount of concentration I'm going to give to these is based on how many questions we get from our clients and people who call us every day. And yes, I still do come to my office. That's where I'm at right now, even though I don't dress in a suit anymore. Me and one brave soul, one of the 6 employees I was talking about, still come to the office. Everybody else is working from home. So I am here. If you have questions, please call me. My information is ready. Okay. And economic impact payments. A lot of people have been calling me, asking me, where's my payment? Why haven't I received it? There's really no rhyme and reason. Some people who seem to be least deserving got it on Wednesday of last week, first time when it went out. Others have not gotten it yet. I haven't gotten mine yet. My employees got theirs. Their parents haven't gotten theirs. And the answer the IRS gives.
What?
I'm sorry?
Oh, I'm sorry. Yeah, sorry. Go ahead.
The answer the IRS has is we never promised you overnight delivery of the, your stimulus payment. It is, they give us a 3-week window, but this is a mighty IRS. I used to work for them. It's a huge gigantic bureaucracy. Even if they go beyond the 3 weeks, who's to say to them, you know, why did you go beyond 3 weeks? What are you going to do? Go sue the IRS? So we just have to wait. If you know you're entitled to it, you're eventually going to get it. Just bide your time. 3 weeks is the time they've given. If you did not file a return after January 1st, 2018 that had your bank account information, almost for sure, you know it's not going to go to your bank account. It's not going to be a direct deposit. So look for a check in the mail. Again, a lot of people have not received theirs yet. I haven't received mine, and there's no shame in not having received yours. It doesn't mean there's something wrong. If 3-4 weeks go by and you still haven't received yours, hopefully by then. See, what a lot of people don't realize is IRS is bound by the same predicaments as the rest of us. Most of their people are working from home. Most of their offices, their physical offices are closed. So even if you are lucky enough to reach a live person at IRS, they're working from their home. And the information is sketchy. It's very rapidly changing. It's changing by the minute, by the hour, by the day. This morning when I came to work, I heard some news that they said today they may vote on more funds for their various loan programs. I still don't know if that's happened because I've been at work here so busy. I haven't checked the news. So
they're supposed to be having in front of Congress right now another $250 billion that they're working on a bill to approve to add to the CARES and the stimulus.
Exactly.
The SBA. Mm-hmm.
That's the one I wasn't sure. So it hasn't passed yet.
Not that I'm aware of.
Okay, see, this morning when I came in, they said it could pass any minute. And thank you for that update, David. I'm going to, of course, check the news when I go home tonight. Therefore, don't expect miracles. Don't call your accountants. Expect them to know all the answers because they're just like the rest of us. A lot of us are getting our information just from the news. At this point in time, the best thing to do is bide your time. You will get it. And I'm going to read you some quick information about that. If you,
hey, Ed, real quick, sorry to interrupt, but I filed my tax return for 2019 electronically with direct deposit, and I still hadn't received anything. And the IRS on their website under something, make my payment or something like that, I went and logged on and they said, yeah, you're eligible. We need your direct deposit information. And I was able to enter it all online. So if you go to irs.gov, and look in there, there's an area where you can check and see where your money is.
Exactly. If you got anywhere with that site, you're lucky. I myself have not been able to get anywhere. Anytime I call, it says you're not recognized or some negative message like that.
Yeah, it's called Get My Payment. That's it. Get My Payment.
Get My Payment. Okay, great.
Yeah, Get My Payments. Exactly. I've been on that and I get nowhere. And just like any other person, any other taxpayer, I get on it and I'm not able to get anywhere. I'm not able to reach any live people on the IRS line, even though I call it supposedly the preferred, or practitioner priority line is what they call it. I call it that line, there's nobody.
Okay.
I'm sorry, Michelle, what was your question?
Oh, I had a question.
Sorry, that was a question. That was just a, hey, FYI, guys.
Okay.
Oh, okay.
Okay.
Very good.
I'm sorry, let me just quickly move on. If you have questions, I can always answer via email or you can call me later. That's no problem, but I have a lot to cover and I haven't really even begun to scratch the surface. You get $1,200 per qualified individual, $2,400 for married couples, $500 per qualifying child under the age of 17. The payments will be made as, this is what the IRS says in quotation marks, as rapidly as possible, and will automatically be sent by IRS. I already said this information, so I'm not going to read it. For taxpayers who have not previously provided bank information for direct deposit or withdrawal in the coming weeks, the Treasury plans to develop a web-based portal. That's what you were talking about, Michelle. For individuals to provide their banking information to the IRS online so that individuals can receive payments immediately as opposed to checks in the mail. First, they said people on Social Security would not be covered, and they said they would be covered. So the IRS and the Treasury is making up a lot of this information as they go. It's not an exact science. It's not like they thought it through and, these are well-informed decisions. They are like us. A lot of the information, I know this for a fact, a lot of the information they're putting out is self-contradictory. They contradict some of the other information they put. So Here's a caution, note of caution. An IRS created a website for taxpayers to provide their banking information. This will surely be ripe for fraud. Have your, that's talking to us, that's note the IRS sent CPAs. Have your clients take extra precaution that the website they're entering their banking information into is truly the one set up by the IRS. Some of these mock websites are so good, they fool even the experts. You think you're entering information to the IRS, it's not the IRS. So make sure, make double sure, make triple sure that it is the IRS. So you know how IRS is irs.gov? Sometimes it could be irs.go or irs.something. That's not the irs.gov. Make sure you're trusting your information to the right source, please. On top of everything else, you don't need to worry about fraud or scams or your identity being stolen or your money being stolen. And then we have the AGI limits. If you are MFJ, $150,000, head of household, $112,500. If you're single, $75,000. After that, it starts gradually going down from the $1,200 per single or $2,400 per married couple. Okay, the next area I wanted to cover was payment protection loans. Payment protection loans, we get a lot of questions about that, PPP. IRS, I believe, made a bad mistake, huge mistake in announcing, just think about it. They announced before they even made the loans available that this is going to be forgivable. I mean, if you tell anybody on earth and their brother that I'm going to give you a loan that I'm going to forgive it, who doesn't want that kind of loan, even under the best of times? So they made that announcement, this loan is going to be forgivable. So everybody on earth and their brother rushed to get it. That's why, that's in reference to what David was saying before. They ran out of money within a couple of days, and now they're trying to refund it. I bet you anything they're going to go run out of money again really soon. Because if you're going to give a loan that's going to be forgivable, you don't make it public beforehand. You make it attractive, say that rates are low, whatever. And then you can, later on, after you give the loan, decide you're going to forgive it, maybe on an individual basis, but they didn't do that. The government is kind of working in a panic mode. You just, okay, we have all this money, we're going to give it out and it's going to be forgiven. So sure enough, there's a huge rush, systems are crashing. Even those who apply are, the websites are crashing, banks are overwhelmed, big banks, Citibank, Wells Fargo, Bank of America, Chase are all overwhelmed. My own bank is Citibank, and I tried to apply for it. It was like 4 or 5 days after it was available before the application even became available through my bank. And yes, you do have to apply through your bank. You cannot directly apply to the SBA. It is an SBA guaranteed loan, but you have to go through your bank to get it. So that was, I believe, a mistake on their part, but it is what it is. And then if you apply for the Paycheck Protection Program or PPP, it's exclusive of some of the other options you may have. So for example, there's a credit program going on, there's a payroll tax delay program, there's extended unemployment, but just beware. If you apply for this, and if you get that loan, you are precluded from applying for anything else. So you may want to do your math, see how much you would get under each option, and go for that option instead of just rushing like everybody else to get this loan, and then later on you find out there was a bigger credit you could have gotten. And the credits are given out refundable. Do you know what a refundable credit is, people? A refundable credit. No. You do or you don't? A refundable.
I don't. Go ahead.
Let me just give a brief explanation. A refundable credit means a credit is money that you've given in tax that's not given back to you. That's what a credit is. So let's say you are eligible to get $100 because of how much you have given to government previously, that now you can get back $800. But if you get a $1,000 refundable credit, that means that extra $200 that is not your own money is also going to come back to you from somebody else's taxes. So it's a precious thing to have in the tax world, the refundable credit. So you get a refundable credit under the payroll tax delays and employee retention credit programs. So again, do your math, work the worksheets, make sure that what you're getting is the best deal possible, because once you get one of these and you get locked into it, you cannot apply for something else. Or conversely, if you get a credit, you're not able to get the loan. And then the next thing I wanted to talk about is, I already kind of talked about it, the Employee Retention Credit Program. Let me just quickly read something from that for you that I think is important. There's a note of caution. First, let me tell you what it is before I read the caution. The CARES Act provides a refundable credit against quarterly employment taxes equal to 50% of the qualified wages and compensation paid to each employee by qualified employer. Only wages paid after March 12th, 2020 and before January 1st, 2021 qualify for the credit. The maximum qualified wages per employee is $10,000, which equates to a maximum employee retention credit of $5,000 per employee. Here's a note of caution now. Beware of the following limitations. Employers who receive a paycheck protection loan under the CARES Act may not claim the employee retention credit. This is what I already said anyhow. If you get the credit, if you get one, you can't get the other. Self-employed individuals may not claim the credit for their self-employment services or earnings. This is another question we've been getting a lot. People call me, a whole lot of our clients have been calling me saying, I'm self-employed. I don't have employees, but I'm self-employed. What do I do? I cannot qualify for unemployment. What do I do? Well, two things. Now, EDD will have a budget for self-employed people, number one. And number two, you can still apply for the payment protection or payroll protection program. It's a loan mainly to cover your employees, but even if you don't have employees, you can still apply for it. So those are two things you can do. And SBA grants a disability insurance for self-employed individuals. So these are the three things you can do: SBA, payroll protection program loan, and go to EDD and check. I know getting through EDD is like getting through anywhere else these days, very difficult, but they do not have a budget for self-employed people. Okay, what else is there? Let me just tell you a little more about the extended employment program, which is on my notes, page 28. Who is eligible for pandemic unemployment assistance? Individuals who have not been recently working, self-employed individuals, and independent contractors. However, the benefits are not available to those individuals who are able to work or telework with pay, but they're just choosing not to, or receiving paid sick leave other than leave benefits. Then there's a whole list of covered individuals for pandemic unemployment assistance. They have to be diagnosed if you actually had the disease. There's special care or monies available for those people who actually have the disease, God forbid. There's a list of about 15 requirements for that. I'm not going to bother you with reading for it. One other thing, I know I'm probably going over time, that I wanted to mention is the SBA website. If you haven't been on it already, get on it, please. They offer, again, payment protection program, PPP, that they're going to tell you go to your bank or your financial institutions. They offer an EIDL loan, EIDL, which is economic something disaster relief loan. Then they have the SBA Express Bridge loans, which enables small businesses who currently have a business relationship with an SBA Express lender to access up to $25,000 quickly. Then there's the SBA Debt Relief. It's a debt relief program that the SBA have for small businesses that have gotten in over their heads. And all of this could be found. I'm going to copy and paste the website on the chat box here. David, how do I access the chat box? Oh, here we go.
Go to where your bar is. Okay,
I got it.
Good.
Okay, that's that. And the state of California has a website that relates to these topics that I'm going to also copy and paste for you. It's pretty useless. It's pretty much going to tell you to go to you know, SBA and your bank and everybody else. It just points fingers to other directions. But here it is anyhow. This is the state of California. And then I'm also going to give you the EDD's relevant website, which is right here. I'm glad I'm able to come to the office because most of what I do is answer phone calls now. Something I never used to do. Our staff answer the phones, but people, anxious people call with so many questions. And I'm so glad to be able to be here instead of our voicemail getting the questions and me answering secondhand or through email, to be able to be here and, you know, directly respond. So please, that's what we're here for. We're here to serve the public. If you have any questions, call us. Call us, obviously not tonight, but you know, tomorrow and thereafter, or email me. Email is actually the best way because if I don't know the answer to something right off the top of my head, that's the other thing. People think I have all the answers right here, which I don't. If you email me, I'll have time to research if I don't know it right, you know, right offhand. My email address, I'm going to type it for you, is ed@mofradfinancial.com. And my phone number also is 213-388-8400. And again, I love David. David and I have been working together for a long, and we seem to be a good match because we keep sending useful referrals to each other. And this has been true over the years. So you can also reach me through David. Oh, David, feel free to email all my slides. I have a whole lot of them. I got
yeah, it's quite cumbersome tonight.
Yeah, but
I'll send them out to the group.
Everything I've mentioned and then some is mentioned in outline format in the slides. There's 50 PowerPoint slides or more. My assistant put it together hastily this afternoon amidst all, you know, everything else he's doing and I'm doing.
Yeah.
But David will send it to you guys.
Yeah. Does anybody have any questions for Ed, the CPA, while we have him on? We know we're really late already. Go ahead.
Oh, my question is, if you haven't filed your taxes like myself, not yet, I've got an extension. Am I eligible for the $1,200?
Yeah, did you file your 2018?
Yes.
Yes, they're gonna go after 2018 information, yes.
Oh, so what do I do to get it?
Nothing. Nothing is automatic. You haven't gotten it, I presume yet, right?
No.
Okay, this seems to be forming a trend. Everybody who hasn't filed their 2018 has not gotten it, including myself. I'm always the last to file my own. I'm waiting, just wait. It's probably gonna come in the mail. Like Michelle said, you can try to get online and see if you can submit your you know, bank account information. But again, be very careful. There's a lot of fraud out there. There's a lot of scam out there. And number two, those systems crash all the time. I haven't been able to reach, if Michelle was able to reach them or get somewhere with that website, where's my payment? Michelle is luckier than I am. Just be careful, or just wait for the check in the mail. It will come. They may be late, it may be, you know, a week or 2 weeks or 3 weeks, but it will come.
Okay, well, I filed mine, I think September or October of 19, so the 2018 one. So I assume I'm on the bottom of their list.
As am I, yes.
I just posted the link of where I went last night to update all that stuff. And I did everything online.
Great.
But I have an account with them. If you don't have an account with them already, then it might be hard, but I was able to log in, security questions, the whole deal.
Oh yeah, I did too, okay.
All right. Any other questions for Ed, the CPA?
Nope, thank you, Ed.
My pleasure.
Okay, thank you, Ed.
My pleasure.
I owe you one, Ed. I appreciate it.
Thank you for taking your time.
Thank you guys for being on tonight. Have a good evening. Thank you, Randy. Bye, ladies. Bye, Michelle. Bye, Adrian.
Thank you for your time, everyone.
Thank you very much. Okay, have a good evening.